Alright, what's up everyone? So, welcome to this week's weekly recap. We'll go over the trades I took, the ones I didn't, the good setups of the week, kind of how I read price action, and also I want to talk about how you can identify, how you can avoid losing money, and how you can potentially make money in one directional days where we're just either pumping or dumping into one direction, which was a pretty common trend towards the end of this week. So, starting here on Monday, the main thing I was looking for was how last week my main bullish draw was this daily gap right here. So, after we filled it, you can see that we ended up resweeping this internal high that was inside the gap. So, this high right here, we ended up resweeping it on Friday, and we've been rejecting that since Friday. So, I was overall bearish coming into the day. So if you look at this resweep right here, we've been dumping overnight. So that was my overall direction for the day. Now, actually getting here on the high time frame, if I wanted to take shorts for the day because I was bearish, of course I want a manipulation opposite to that. So I wanted to see a move up on market open. As you can see, our pre-market structure was kind of already leaning towards going up. So that's why I placed my fib both here in this last bearish leg before market open and also in this main retracement right here. So if you look at the 15-minute before market open, this main retracement right here, this is kind of my ABS regular placement for a fib. And as you can see, the deviations of both fibs kind of align, and you can see how we ended up rejecting pretty much perfectly from the fourth deviation right here. And it also aligns pretty decently with weekly open, which is a time-based liquidity pool, so it acts as any type of liquidity pool. We also had a high time frame SMT with ES, and even though we still had the NWOG here on NQ, we did feel it on ES, and as I said, high time frame we were pretty bearish, so I wasn't necessarily waiting for price to go all the way to the NWOG. Another thing is I usually care way more about NWOGs when they are big. So like this was basically a 10-20 point NWOG, so it's not nearly as significant to me as a liquidity pool than if it was like a 100-200 point NWOG. And as you can see, after we had our manipulation up here on open, you can see also that this first move up, we kind of edged those deviations. Usually this is a pretty clear sign that once we sweep it and tap into those new deviations, we're going to have a pretty nice rejection. So if you wanted to go for an even lower time frame, kind of riskier entry, you could have limited the resweep, but of course it's kind of risky. So I usually like to see more entry confirmation, but you can see kind of how once we tapped into the fourth deviation, we rejected from it completely. And we ended up retracing it again towards this range, the 0.5 of these rejection blocks right here. And this is also very common because it's very early on market open. So usually until around 9:40, 9:45, sometimes we're going to be spiking on both directions a lot just because there's a lot of volatility being pumped into the markets. So you can see we kind of have this up and down move. But after we have these rejections and this 30-second inversion here, which was actually the highest time frame inversion of this leg, so pretty nice and high probability entry. You can see that this ended up sponsoring this whole move all the way to London lows, which was my main liquidity pool for the day. It's also a time and price based liquidity pool, and I always look at it. You can also see how this -3 deviation aligns perfectly with London lows. But you could pretty much have targeted anything because as you can see, price ended up going all the way to Friday's low right here. Ended up going for 320 points if you got this entry. So you could have targeted pretty much anything like this sell side right here, or this was also Asia lows or London, or any OT of this range, any gap. This was one of the days that we had a very clean PO3 aligned reversal at 9:30. So 9:30 open, manipulation higher, and then just dumping pretty much the rest of the day until the final draw was taken. As you can see here on the high time frame, this is a very high resistance liquidity pool right here. So this was pretty much the last point of reversal. And as you can see, after we took that low, we ended up just rebalancing the range and the move for the day was done. You can also see how we retested that point 3 times while we were rebalancing the range. But I would have definitely not tried to take any trades after this. This was the main move of the day, so I would try to capitalize on this one. Now after that, as I said, we rejected from this low right here, which is also within OTE of this range right here. So if you look at this range, we're within this 0.618 to 0.705. This is OTE of the range. So we already rebalanced the high time frame range. We're rejecting from a liquidity pool, and now I'm ready to shift my drawn liquidity back up right here. So coming into Tuesday, I'm actually gonna flip my bias to bullish. So now coming into Tuesday, as I said, I'm leaning bullish. So looking at possible reversal points, same thing with Monday. If I'm looking for longs, I want to see a manipulation short on open. So where is price likely going to manipulate to? Okay, the highest time frame gap in this leg is going to be this discounted hourly gap right here, which also aligns pretty nicely with London lows right here at this low right here. So this is a pretty nice liquidity pool. Also, if I place my fib on this last bullish leg right here before we have the open, you can kind of see how the deviations align pretty nicely, and we ended up rejecting from the 0.5 within those deviations right here. So after we had this manipulation down, we could also have placed an ABS fib in this retracement right here on open. So you can also see how this first move edged this negative 1.5 deviation right here. We ended up getting a resweep into a new deviation, which we also rejected from the 0.5 right here. Now at this point, the deviations are looking very nicely, the rejections are looking very nicely, and there's no more liquidity pools below that are as significant as these ones. So I'm already looking for the reversal right here. So what I do in this case is I go for a lower time frame, like the 30-second, or in this case the 15-second. And as you can see here in the 15-second, we have those nice resweeps right here, and we have those two 15-second gaps. I wait for both of them to get inversed. In the same candle that we inverse the gaps, we have those CISD right here. So that's my entry after this candle closes. I place my stop pretty tight right here, close to this swing. Also, this momentum is very nicely, so I didn't feel the need to place it all the way to this week. And then you could have targeted any liquidity pool you wanted, so 930 highs, or this buy side right here, or we could have gone all the way to previous day high, which is what ended up happening, and this was my final liquidity pool for the day. So this was a very nice reversal, very nice trade, very clean day. This was one of the best price actions we've had in a minute. Pretty nice rejection, nice liquidity pools, nice draw, nice delivery. Just overall beautiful day. Kind of very similar to Monday also. Now coming into Wednesday here, after we took this buy side right here, previous day high, this high right here, the NWAG, I was kind of uncertain if this would sponsor shorts again or if we would just keep pumping. So if you're uncertain about the overall market direction, the easiest way to make it clearer is waiting for a significant open. So for example, 930 open. So this day, when we had our 930 open right here and we were pretty bullish, my next drawing liquidity would be this 4-hour unfilled premium gap right here, which was on a very nice spot in this leg. So I was thinking about taking a reversal from this to take shorts, but we ended up not getting really any nice entry. We did get this 30-second, which wasn't too bad in my opinion, but I ended up waiting a little bit to get some extra confirmation. And after we kept pumping and then we started chopping, I kind of realized this wasn't going to be a very nice reversal day. So this ended up being a zero trades day for me. But I do think that this 30-second was a pretty nice possibility for a reversal. Aside from that, I don't think I would have taken anything. And in terms of fibs, I could have placed in this last leg right here, this last bearish leg before the opening up. And as you can see, we also have a pretty nice 0.5 rejection from this. So as I said, pretty nice setup. I was looking into this. I actually thought, when I didn't take this, I actually thought I was gonna miss out on this trade, but it ended up being one of those days where we're just going in one direction, so no reversals and no trades for me. Now, coming into Thursday, this was the main day where I was talking about market being one directional and how you can avoid taking losing trades and forcing reversals in days like this. So there's a few things I look for when I'm deciding if a day is just going to be one direction. One is going to be the liquidity pools. So for example, after we rejected from all this buy side right here and we rejected from it overnight, this would be your first sign that would be at least slightly bearish right on open. And at that point, you're thinking, okay, at what liquidity pools are we drawing to? So you could have targeted, any of those gaps in this leg. We're also trading within this big 4-hour gap, which is kind of annoying to trade with. We also had, EQ of this whole range. We had those discounted 4-hour right here. So if you're uncertain about where the reversal is gonna happen, like there's a bunch of different liquidity pools. So like there's this huge gap, there's this discounted gap, there's 0.5 of this range, there's OTE, there's a bunch of other gaps, there's order blocks. Like you really don't know exactly where price is gonna reverse from. And if we just keep going lower, that is one sign that you should wait for extra confirmation for you to take a reversal. Another thing would be the volatility and how cleanly price is delivering to that one direction. Now, this is not very true to this case because as you can see, we're still kind of chopping during market open or those first 15 minutes of market open. But usually, if you see that price opens and we're just having straight 50-point candles towards one direction, it's clear that price is very strongly dumping. So probably shouldn't try to force a reversal if we're so one directional, so aggressively going towards a drawn liquidity. Now another thing that makes it easier, for example, let's say you were looking at any of those liquidity pools, you placed let's say a fib here in this retracement and you were looking for a reversal here, for example, any of those 30-second inversions right here, or after we tapped into this deviation, you're looking at like this inversion right here or something. One thing that really helps with you not taking those trades is just setting a rule to yourself that you're not gonna take a trade until a specific time. So for example, I think 9:45 is a great time for that. If you feel like you've been taking a lot of early trades and you feel like you got the overall direction of the market wrong, usually just waiting a little bit makes it way clearer. Because if you decided to wait until 9:45, you can kind of see how we are chopping. And at 9:45, you'd look at those reversal setups and you realize that most of them or all of them failed pretty much. So at that point, you'd think, okay, actually, I'll wait for extra confirmation, better quality, better setup to try to take longs. And then after that, you can see that we just keep slowly going up and then volatility kind of spikes out of nowhere and we just have a huge dump. So at that point, you either take continuation shorts or you don't trade at all. And in both of these scenarios, you don't lose any money, which is ideal. Now, usually for continuations, you want to wait for a 5 or a 15-minute gap to open up so you can catch the retracement into it. So let's say we open a 5-minute right here, then we tap into it and then that sponsors the continuation. But also days like this where we're just super volatile or just straight up one directional, it's kind of hard to get those type of continuations. So I think there's nothing wrong with taking 0 trades in a day like this. And as long as you recognize that, okay, it doesn't really look like price is gonna get a reversal right here, let me wait a little bit more. Okay, yeah, definitely doesn't look like a reversal is gonna happen here. Like these inversions are failing, and yeah, I'll just not trade. So this is the type of reaction you should be having to how price is moving. You should always be able to look at price and be like, okay, based on what's happening right now, I'm not gonna take a trade or I'm gonna take a different trade. And a lot of times, when people are looking into the market before market opens and they're kind of getting their daily bias, it's very easy for them to think, okay, I want to take reversal longs after we tap into a specific liquidity pool down here. And then you kind of marry that trade idea, which kind of stops you from reacting to how price is actually moving after market open. So you always have to keep your eyes open and see how price is actually moving. And you can also apply the same thing on Friday. As you can see right here, you could have gone a nice long setup after we got this resweep of pre-market lows, and there's some fee placements right here and there, but if you didn't catch those initial longs and you saw price just straight up chopping after 10 a.m., at some point here you'd have to think, okay, price is just chopping, it's end of week PA, we're not delivering to any significant liquidity pools, so I'm done for the day. If you try to take, oh, we're gonna open a gap here, and after we tap into it, I'm gonna try to take continuation longs, like after you see this whole chop right here, you shouldn't try to force anything. Unless you get kind of lucky that the chop stops right when you enter a trade, it's very likely that you're gonna be break even at best. So I wouldn't try to force anything, and again, that's why you should be reactive to how price is actually moving. And this is not only how you make money in those markets, but how you avoid losing money. And this is the most important thing about trading. This is a survival game, not just a winning game. And a lot of times people are unprofitable because not of the trades that they don't catch that are winners, but because the trades they catch that are losers. So if you just avoid taking those dumb losses in days that you can easily spot the overall structure. So yeah, this is pretty much it that I had for the week. Monday and Tuesday were very nice reversal days where I capitalized, and then I refrained from trading the other 3 days of the week pretty much. And I was able to be very green on the week just by spotting overall the narrative, the liquidity pools, and aligning with my low time frame entry. So yeah, hopefully this recap was helpful and you can kind of apply this stuff when you're trading in the next weeks. So yeah, shout out to everyone. Peace.